All right, shares of Tesla selling off again today on news. It will shorten shifts at its Shanghai factory as soon as next week. Stock's taking a beating this week, down more than 10%, down more than 20% since Elon Musk's Twitter takeover, down 50% on the year. I could keep going. Our next guest, though, says the recent pullback could be a great time to get in. Let's bring in EMJ's Eric Jackson. I mean, right, it's been pretty tough story to listen to. 10% in the week, 20% in the month, 50% in the year. Why now? Why get in now?
Well, I think you have to look back at when were the last few times when you saw a drop as steep as it has been over the last couple of months for Tesla, Scott. Here's another number. It's down 44% since mid-September. Mid-September, it's not that long ago. There was a pullback at the beginning of this year, about the same magnitude, and then it bounced significantly. There was a lesser decline in the first half of 2021. It dropped about 36%, and then a big bounce. I think it's due for a bounce. It probably is not going to bounce until the general market bounces. But one interesting thing is that if you look at just the valuation of this company on an enterprise value to sales basis, it's about 7 currently, 7x. The last time it traded that cheap was 2016, 2017. Of course, they were burning cash back then. This quarter, they're going to, even with all these worries in China and Twitter, they're going to do $3.2 billion in free cash flow. So it's got to bounce sometime. I think it's due for a bounce now.
I mean, the goalposts, though, have kind of moved, right? It's a little bit harder to kick the ball through them. You have, as you said, what's going on with China, Shanghai. You got the lockdowns, you got production. You do have margin questions now. You have demand issues with a slowing economy. You have more competition. The landscape is, more littered with issues.
I think there are a lot of stocks out there that, forget about, pre-pandemic. I mean, they are trading back at multiples way before the pandemic ever came around, at this sort of lower edge of the bands that they've historically traded in. And I think Tesla is one of them. And, typically for many stocks, when you see them just sort of dip down to those levels, yeah, they could go lower, but chances are that they are due for a bounce, and I think that's where we're at right now, with a much more sophisticated, built-out, developed company that Tesla is today compared to where they were in 2016, 17, when bankruptcy was certainly, not off the table for them.
Speaking of due for a bounce, what looks good to you right here? You buying anything?
Yeah, I like Shopify here, Scott. I think that it's another one where it's back at its 2016, 2017 multiple levels. It's obviously had a horrific 2022. It's down something like 72% on the year. The good news, if you want to take it this way, about their decline this year is that most of it happened in the first 4 months of this year. And so actually, they are close to actually getting up above their 200-day moving average. They've also taken their medicine. They've laid off people at the company. E-commerce isn't going anywhere soon for a lot of companies that have to compete with Amazon, and Shopify is their go-to partner. So that's one that I'm particularly positive on for 2023.